talk about the European economy first, after what we've seen from the ECB yesterday. Why would this next cut we saw, ultimate cut, be the ultimate cut and really basically break the circuit and inject really liquidity?
Well, I think what Mario Draghi meant is it's the last cut because you can't go below this. At least getting to significantly negative interest rates, which is what they would require. I think it's technically possible, but really very, very difficult. So the orthodox monetary policy is now exhausted. But of course, that doesn't mean that what they've done is going to be enough to ensure a recovery in the Eurozone economy and enough to avoid significant declines, further declines in inflation. So I don't think it's the end of policy, it's just the end of orthodox policy. And I think what they've now started on is a new era of unconventional policy. Indeed, he's promising that with his new proposals to purchase asset-backed securities. I think that's probably the beginning of more unconventional policy, more controversy, more difficulty, because I do believe that the Eurozone economy is structurally weak. It suffers from both supply and demand problems. And the ECB, as he himself has explained at Jackson Hole very recently, is going to have to play a big part, along with others, in actually solving the crisis, which is not solved.
So it is a structural problem. So basically the ECB is buying time for the local governments to really get down to the structural problems. They haven't in the last 5, even 7 years. So what would make them speed up the process so that the time bought will be really enough to give this economy a push, which is, at the end of the day, from a consumer point of view, the largest in the world?
Yes, I think I agree with that question. I'll come to it in a second. I would emphasize that I regard the demand problem as also structural. That is to say, there is a chronic weakness in private sector demand in Europe. There has actually been a chronic weakness since the 1990s, and this was just covered over with the credit boom prior to 2008. And when the credit boom collapsed, we discovered that there was a chronic weakness in demand, which is why interest rates have had to fall so low. There's also, and I think they're linked in complex ways, chronic weaknesses in supply. So what we need is policies that address both. And the truth is we've done neither. So we've just relied on the temporary boost of the central bank. Now the central bank is going to have to do more to ensure demand is sustained while serious structural policy begins. Some things have happened, particularly in Spain, Ireland, very small country. Obviously, France and Italy have been very resistant. My impression is Germany is going backwards at the moment. So the reason is, of course, that the structural policy, what we call structural policy changes, really involve tackling a whole range of vested interests, which are immensely powerful. It means really radical improvements in the performance of government, public administrations and legal systems, which is incredibly difficult to do. It means changing the whole political process in certain cases. It means, of course, labor market reform, and it means, in my view, the most profound changes in the industrial sector, actually in businesses, in the way they function. Now, then you start talking about specific countries have different problems of different nature, but most of these solutions will take a very long time to be successful. In Italy's case, I think we're talking about a process that would last a decade or more before you get real signs of success. That means, of course, that in the meantime, a lot of things will tend to get worse. Unemployment will tend to rise. This is terrible. That is why I think the demand side is also so important. So there is some support for the structural reform agenda politically. Otherwise, there's a real danger that we'll get populists elected and the whole process will unravel, and even the Eurozone itself will come under threat again.
We have seen that in the past also, even with the German elections. You just mentioned Germany going backwards. We've seen the GDP figures for the second quarter down 0.2%. Now that makes me wonder about the structural changes that have been implemented over the last 10 to 12 years under Schröder and then carried through by Angela Merkel. And now Renzi wanting to model what we've seen in Germany. Does that mean that this model lasts for a certain amount of time and then basically starts to show flaws?
I think it's really important here to see the relationship between the demand and supply side. What Germany did, which I respect, is make its export competitiveness model more successful. So they rebuilt and regained their export competitiveness from the 2000 onwards to a remarkable degree. But of course, the disadvantage of that is that, of course, Germany, by its nature, is now very dependent on external demand. So when external demand weakens, as it has been, as we can see in China and even in the Eurozone, then the German economy itself, which is so export dependent, also weakens, and domestic demand is very weak. Now, of course, if you then say to the rest of the Eurozone you should follow the same policy, well, they can't all generate growth, is a point I've made very often, simply on export demand, because in aggregate they're too big to hope for the rest of the world to take their exports. And of course, the spending of one country is other countries' exports. And so Germany actually needs buoyant demand in France and Italy, which are very important export markets. Remember, Germany exports much more to the rest of Europe than it does to China. So this is why making your supply side competitive is very important. But it's also important to get demand. Now, I think the obvious thing to do, apart from monetary policy, is for Europe to agree as a whole on a major investment spending, public, private combined. Eurozone can finance it. Its public finances are in good shape. The ECB can support it. You need growth-oriented demand policies, and that's where the investment comes in. And I hope Germany will see the importance of this, both at home and throughout the Eurozone. And that begins to be the basis, I think, of a plausible demand and supply policy. But just cutting costs and going for export competitiveness is not a generalizable strategy for the whole of Europe.
Which I think is a very interesting point, because what Germany did as well, raise its unemployment from 12% almost in 2003-4 to now about 5.1%, and still domestic demand doesn't balance out the lack of export. Now, what does that mean about the quality of jobs that have been created?
Well, that is obviously an important part of the problem. In the German case, obviously the households are very cautious, we know that, they save a lot, but there's the additional fact, which is a real puzzle, is that the German corporate sector is very profitable, doing very well, but they're not investing. So I think that's actually a question. I would have expected in Germany now some increase in domestic consumer credit, people building more houses, but obviously something is going wrong with the income side. But also I would have expected a big investment boom from the German corporate sector, and that we're not seeing that. So there is a real question of whether, or why perhaps, a successful program of reform, which had real achievements to its credit, has not generated the sort of big, broadly based boom that it did, for example, in the 60s. Very similar policies. And because it's not working in this way in Germany, that of course means Germany is not a real locomotive for Europe. It's not generating demand for others to gain from. And that means that the whole Eurozone is weak, because we're essentially relying on demand being generated in economies that are actually suffering from terrible structural problems. And that doesn't work. So the ECB does its best, but the ECB's tools are very limited. So to some, I'm actually really very pessimistic about the medium term for Eurozone. I think we're going to continue to see semi-stagnation. I've been warning about this for a long time, and I see no real chance that this will change without a significant change in policy on the lines I've outlined.